start working with Chapter 5, Problem 5-5A. In this problem, we are told that an inexperienced accountant has prepared this condensed income statement for Simon Company, a retail firm that has been in business for a number of years. This is for the year ended December 31st, 2017. As you notice over here, it's in a highly condensed form, which means we don't have any details. Then we are told that as an experienced, knowledgeable accountant, you review the statement and you determine the following facts. They've given us 4 pieces of information, and then they've asked us to prepare a detailed multi-step income statement and asked us to assume a 25% income tax rate. They've given us a hint and told us the net income number should be 67,500, not the 105 that's presented over here. So let's see how we're going to use this information to analyze the income statement and make corrections. So I have done 2 things over here in my Excel file. I have the income statement, the shell laid out, and I'm going to work through the 4 pieces of information. So in the income statement, the standard format is always the heading, which is name of the company, name of the statement, and what period it pertains to. So I have the the Simon Company income statement for the year ended December 31st, 2017. I also know at the very bottom, my net income number is going to be 67,500. That answer was given to me. So once I work through my problem, I should end with that number. We always know that our starting number is sales number. And let's see what's told over here. Net sales consists of $911,000 less freight out of merchandise sold $33,000 and sales return and allowance of $28,000. Freight out is a selling expense. It should be under your operating expenses. It should not be up here with sales. So let me write down the information that was given and see what we'll do with this information. Sales is $911,000. Freight out is $33,000. Sales return and allowance is $28,000. They calculated that number to be net sales of $850, and that's what they have over here, net sales of $850. We know that's incorrect. So over here, my sales number is, the starting number is $911,000. What we also know is sales minus sales return allowance and minus sales discount will give us a net sales number. I know my sales return and allowance is $28,000. That's the information I got from here. We'll take a look at sales discount in a minute. We'll look for that information. Then they tell us other revenues consists of sales discount of $18,000 and rent revenue of $4,000. So if you look at your other revenues of $22,000, the way that number was calculated is sales discount and rent revenue. Rent revenue is other revenues which should come at the bottom of the income statement. It should not be up over here. Sales discount, we'll put that number over here. So now that we have these 3 numbers in place, we can calculate our net sales number. So the correct net sales number is $685,000, not the $850 that they've given us over here. So what I'm going to do over here is, as I take a piece of information, I'm going to highlight it to indicate I've taken care of that number. Okay. And I've taken care of the sales discount number. The third piece of information tells us the selling expense, that's this $109,000, consists of salesperson salary of $80,000, depreciation on equipment of $10,000, advertising $13,000, sales commission $6,000. The commission represents commission paid. At December 31st, $3,000 commission has been earned by the salesperson but not yet paid. Well, it doesn't matter if you have not paid. If they've earned it, we should record it as an expense. They're telling us all compensation should be recorded as salaries and wages expense. So let's again first write down the information that was given to us. Salesperson salary is 80,000, depreciation is 10,000, advertising is 13, sales commission paid is 6,000. We have accrued sales commission, the unpaid sales commission is 3,000. So which of these numbers should be taken over as salaries and wages expense? We'll take this 80,000, the 6,000, as well as the 3,000. We need to include that. Okay? But let's wait and see what other information is given here. Administrative expenses, that's 103,000, consists of office salaries of 47,000, dividends of 18,000, utilities of 12,000, interest expense of 2,000, and rent expense of 24,000. This rent expense includes prepayments totaling 6,000 for the first quarter of 2018. So of the 24,000 which they've said is rent expense, 6,000 is for next year. It's not yet an expense. Again, let's write down the information they've given over here. Office salaries 4,000. What should we do with that? We should include that in salaries and wages expense. Okay, so the next thing I'm going to do is I'm going to list my operating expense. Under operating expense, the first one I'm going to list in salaries and wages expense. Which ones did we say we are going to put as salaries and wages expense? The salesperson salaries, the sales commission paid, the accrued sales commission, and office salaries. So what does that add up to? 80 plus 6 plus 3 plus 47. All of that adds up to 136,000. That's salaries and wages expense. The reason I did that is because I was told to do it. All compensation should be recorded as salaries and wages expense. Well, what do we do with these other expenses? Depreciation, advertising, selling expense, utilities, interest, rent. These expenses are all going to be operating expenses. We'll get to dividends in a minute. So another expense we had was freight out, and that's also an operating expense. Freight out again is what it cost us to sell the merchandise. Once we sold it, we paid for the shipping. That's a freight out expense. So I have my freight out expense, I have advertising expense, depreciation expense, utilities, rent, and my total expenses over here. Okay. So all of these put together, I'm just carrying the numbers over from here. So now I've taken care of the freight out expense, the depreciation and advertising expense, my utilities expense, and my rent expense. Okay. But remember this rent expense, we had prepaid rent of $6,000 that had to be subtracted from 24 to arrive at this 18,000. Okay. So this now gives me $222,000 in total operating expenses. So are you with me so far? Sales minus return minus discount gives me net sales. Then I looked at my operating expenses. The freight out expense had been included in net sales. I took it out of there and I listed it over here. All other expenses were given to me. The only one I had to recalculate was salaries and wages expense. Okay. So I've taken care of the information that's been presented over here. I still have to take care of, I've taken care of this one, let me highlight this. I still have to take care of the interest expense, and we'll see where that information goes, and the rent revenue. Let's go back over here. We looked at the net sales number, we analyzed it. Other revenues, we analyzed it, and this rent revenue has to be placed here at the bottom. We have cost of goods sold. Net sales minus cost of goods sold gives us a subtotal which we call the gross profit. That basically says cost of goods sold is nothing but the cost of the inventory. So for every dollar that I made in sale, what was the cost of the inventory? So in this case, I have $685,000 in net sales, less the cost of the goods sold gives me $310,000 in gross profit. I subtract all my operating expenses to arrive at my operating income. I have $88,000 in operating income. After this, I'm going to list other revenues and gains that I have. Now, this is where I take this rent revenue. The rent revenue, I bring it down over here. Okay. And then I will list any other expenses and losses I may have. Is there anything left? Yes, I have the interest expense. Okay. So I have interest expense of $2,000, and this now gives me my earnings before my taxes. The earnings before taxes, I have $90,000. At $88,000 in operating income, I added rent revenue of $4,000. I subtracted interest expense of $2,000, leaving me with $90,000 in income. What else did they tell us over here? Assume a 25% tax rate, which means on this, I have to pay Uncle Sam 25% in taxes. When you subtract the taxes, 22,500, you arrive at your net income of 67,500. That's the number that you had over here. Let's highlight this one because we took care of it. So what's the only thing we have not taken care of? The only thing we did not take care of, I'm going to put it in a different color so we can see it, is dividends. And why not? Why didn't we take care of dividends? Why did we ignore dividends? Well, the reason we ignore dividends is not a part of the income statement. That goes into the statement of retained earnings. So I hope you've gotten an idea as to how to prepare a multi-step income statement. Anytime you're presented a problem along these lines, my suggestion is write down all of that information so it can make better sense to you as to how these numbers play out and how you should make the corrections. Good luck with this.